So I think like you're seeing that institutional interest pick up, not just like in Sol the asset, but actually institutional players launching their own products on the network, which is almost better than just being interested in like buying Sol as a speculator. Like actually building on the chain as an institution showcases that they have the same amount of confidence they have in Ethereum, where most of the tokenized products and institutions sit today.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey guys. He's singing. Boccaccio's feeling good today. Hey guys, welcome back to another episode of 0x Research. I'm joined by Bach, Carlos, and Mark. We got a full research crew today. Our lovely Boccaccio is back to join us on a roundtable again. We always love to see that. Before we get into things, as always, we are constant shills for our events here. So I want to give another quick reminder for Permissionless coming up in the end of June, June 24th through the 26th in New York. Lots of conferences in New York this year. 0x10 is the code as always if you want to get tickets 10% off. A bunch of us will be there. I know Boccaccio and I will be there. I don't know how many of the other team from the research team and OX Research favorites will be there, but we should have a pretty decent crew showing up. So if you want to come, meet people from around the industry, chat with us, we'd love to meet you. So 0x10. Bach, you want to say something?
No, that was it.
I covered it. He's speechless. He is gawking at how good my shills have become.
You did a great job, man.
We can get out of the shills. We can talk. Let's dive into the markets a little bit. I'd love to get Mark Larping a little bit on macro because he doesn't get the chance often, and we try to avoid that. But big news last week was like peak uncertainty. No one knows what the hell's going on. Like there's going to be massive tariffs, and then all of a sudden it's like, no, there aren't going to be massive tariffs, or maybe there will. Trump and admin kind of pulled back on what they had been headstrong on for the past month or so, 2 months maybe. So now things are kind of up in the air. It's like maybe there's exemptions for certain things like chips, electronics, different specific industries or materials. Though like this kind of battle with China still seems ongoing or like TBD. But at the very least, like the markets have looked up. Like we've seen some excitement, at least in our space. Like, Bitcoin was in the 70s and like now we're back, mid 80s, and, alts and other things have seen, a little bit of room to breathe. How are we thinking? Mark, what are your thoughts here?
Yeah, well, I mean, when the chaos ensued, prices were down. I mean, I've been in the crypto space for a little bit now, so I just saw that as a buying opportunity, but mostly for stocks. I got, some of my Brazilian equities that I've had on my watch list for a while, a bit cheaper than I'd like. So that was good. I mean, these things kind of don't worry me when, equities, even BTC comes down. It's like just fundamental support. There's this thing, past performance is not, can be used as a good future indicator. I look at US markets and I just think the opposite. I just think like you want to hold the assets where the top 1% are. So I'm never like, it's something I never panic about. But I mean, but one thing that was concerning was the bond market. Was it April 2nd? April 2nd, there was an announcement, I think, or somewhere around there. And then for like no company below investment grade. So investment grade is like companies that have a strong balance sheet, able to pay back their debt. And if you're below that, you're considered junk or like non-investment grade. Like no non-investment grade company issued a bond in the market at all until maybe this week. So that was actually kind of like spreads really picked up high. The treasury yield, 10 years, 2 years, they all picked up high, which is kind of the antithesis of what Trump and Besant are trying to do. So I think the bond market was a little bit more worrying, and that probably put more pressure on the administration than any other, than like stocks or like, I don't know, like Main Street, because, there's been, nobody wants to oppose President Trump right now. There's no like lawsuits against it. Like I think Main Street just wants to play by his rules, go along with it because that's probably the best strategy, and I think I agree with that. Even though some of the smaller, I don't know what to call them, like trade into like I don't know groups have put some lawsuits, and they think like judges will be the way to block these tariffs. But the on again, off again with the tariffs, I just think it's a great environment for traders. But yeah, I think that's the TLDR there.
Yeah, I also think like on the macro side, the other news is gold making new all-time highs. I think this morning, I think we all bought the wrong digital gold. Should have bought the physical, but like, and yeah, I think we're nearing like maybe a top there. A lot of perps trading platforms are listing PAXG, which is like the gold issued by Paxos. I know Drift listed it like this week. So seeing a lot of like attention in that regard, and just curious to how Bitcoin trades like in this environment where we're seeing outflows from U.S. equities into maybe European and Asian stocks, and how just curious to see how BTC performs in like this like new regime.
I think
Yeah,
that's
I
actually
think
a really good point. I think, sorry, Gani, but
no, go ahead, Mark.
tokenized gold, it hit a all-time high, or like on-chain, $2 billion. So that's a record. And trading volumes last week or this week were $1 billion. So I mean, we haven't seen that, I think, in some years. And I was looking at our new Ethereum dashboard today, and it's the most traded tokenized thing on Ethereum. So I put a tweet out about it, and I call it digital gold because now there's actually like a proper digital gold. No offense, Bitcoin, but yeah, I think that's a solid point and very interesting to see. Like this wave of tokenization is starting to ramp up in different areas.
Yeah, I'm just pulling up what you shared, showing the tokenized gold, which is a great point. I do think this is something that we're hearing a lot. Maybe not about gold, but like about these like inflation hedge assets again. The week or two ago, or maybe last week, like the talk of the town very briefly was, Bitcoin is decoupling from, risk and equities. I don't know if that's really true, but I am seeing more and more this sentiment of like, I don't know, fears of continued inflation, and people are again bringing forward these ideas of like maybe you should have some gold, maybe you should have some Bitcoin. Bitcoin keeps kind of rearing its head in these conversations more, at least more and more broadly than I think it ever has in the past, and maybe part of that is just driven by like, when you just look at it over the past couple of years, it's a far different asset today than it was, a few years ago. The market cap and the size has expanded rapidly in the past few years. The other thing that I find maybe interesting or worth pointing out as well when we think about what the market's thinking about is our friends over at Polymarket and this US recession in 2025. Maybe you're right, Carlos. I mean, who knows whether that was like a short-term bottom or like a top in terms of like fear, but at least in terms of what, the Polymarket traders are saying on this one, there was like a bit of a peak in the worries for recession here back, a week ago or so. Who knows? Maybe things could get worse from here. I'm not an oracle, but it is nice that we have more data and more markets that kind of like play into these different things. And, they might not serve as signal or alpha, but at least being able to look at them after the fact and understand, maybe at least how the market is pricing some of these things in.
It's funny, Danny, that chart that you just pulled up, it very closely mimics the ICE bond spread. Normally they say maybe a 4.2% is like we're heading to a recession. Last week it was 3% spread, and now it's come back down to 2. So 3% is like, okay, there's 66% chance, 2% we're back at 50% chance, and it's like kind of like, it's crazy how Polymarket like can mirror these things just through the masses.
Yeah, I mean they're playing at that old saying or adage that like people can the average sort of figures its way out to the rough true probability, whether that's true or not. But at least, we've seen that with the election, that seemed to be somewhat true, at least in the way that, people were spending their dollars. And I don't know. We'll have to see whether this one turns out to be true or not. We've got quite a few months left in the year. Right now, the odds are pricing in a recession occurring, at least, to a coin flip today. We'll see where that goes from here.
Yeah, I mean, the Atlanta's Fed GDP now is forecasting -2% growth for this quarter. And then a recession is like defined as 2 consecutive quarters of negative growth. So if we already have one and then the other, like I would say 50% sounds about right.
So but it begs the question: does that mean we just, this is like, if it happens, it would be an event-driven recession, and then is the question is it a recession or is it a technical recession? 2 quarters declining GDP and then up only from that. Like, I wish there was a poly market for that.
We might have to see if they get more specific, but I think the big problem, at least for poly market, is just getting enough volume on even those markets alone to make them compelling. But we are seeing more platforms adopt that, like Robinhood rolled out their event trading platform. There's some other platforms. I know, Drift has had their sort of version of this as well, since last year, since maybe around the time of the election as well. So that's becoming more popular. Maybe we'll see, more of those markets start to flourish. This episode is brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your crypto and logins, trusted by 7 million users and securing 20% of the world's digital assets. Follow the link in today's show notes to grab your Ledger now. The other sort of thing that's kind of making its way through these different platforms now is Kraken announced their rollout of US equity trading. So we're kind of seeing the reverse now, where, I think there's a lot of expectation for, TradFi institutions and brokerages to offer like crypto services. Now we're seeing the inverse, where, crypto focused trading platforms are offering, equities and like more brokerage like features, which is interesting. I'm curious if you guys have any like big takeaways there. I know we've talked recently about this idea of like trading stocks on chain. I guess the big question is like, does that matter if, all of these crypto platforms are going to offer their own, equities trading and other market trading just on their platforms alongside the crypto?
A quick take: I think it's the same thing. We talked about this before, but like, to get access to equities, it's already relatively easy in the US. And then maybe you're trying to branch into like a wider market, like with crypto, like young crypto holders who maybe don't own any equities. But at the end of the day, it's, on chain. I mean, Kraken and stuff is still going to be limited to certain markets for the US stocks. Whereas on chain, I guess anybody around the world with a wallet can purchase these, like from Pact or whatever, can purchase these chains. I think it's more like, we a few weeks ago we also talked about Nasdaq looking to go like 24/7 or 24/5 with their trading, and I think just as the demand for like 24/7 global access grows, it doesn't matter who you are, you want like a seamless all-in-one trading app, to have everything in one nice package. So I think, for Kraken and probably some of the others, it's expanding into equities is like a natural step for them. But I think more excitingly, it like paves the way for tokenized assets on that platform. So even though it might seem like these centralized exchanges are coming to eat the lunch of on-chain equities, they can actually be the gateway that opens up more tokenized assets to the masses.
Yeah, that's also my take. I think whenever SECs start doing something, then I imagine that more and more DEXs will focus on listing those assets on their, I guess, not listing because it's mostly permissionless, but for perps DEXs listing, for regular DEXs, it might just be that more people want to tokenize it. I think you probably want to focus on, I know we mentioned Kraken and I've historically said that Coinbase is slow. I think you probably want to focus on Coinbase in this scenario though. Because they have base, I imagine they're going to try and onboard as many equities as they can. And like on the technical side, it makes sense. They hold a lot of the USDC for Coinbase on base, so it should, like, I assume they already have a process for accounting and ensuring that this works out. So it should be relatively trivial for them to make this happen. If they actually do make it happen over the next year, we'll see. Like I said, they tend to take their time, but we'll see.
For me, the main takeaway is like the convergence between like fintech and crypto. Like there's been talk over the past year of Robinhood competing with Coinbase and other crypto platforms. And I think these cements like this convergence where Robinhood was like venturing into crypto more and more. And now you see centralized exchanges venturing on the TradFi side with stocks and ETFs and stuff like that. So I think over time you will see both of these platforms kind of having the same offerings and competing on the same ground. And my other takeaway is just what does this mean for platforms like Backed Finance, who offer like tokenized stock? Like for instance, Backed offers tokenized coin on Base. Like if Coinbase starts offering like tokenized coin, like what does this mean for Backed? Like do they still have an edge, or like do they become are their services no longer needed?
Yeah, I think that's a good question. I think it's sort of the question we have about a lot of these like crossovers between like fintech or like centralized exchange versus like decentralized platforms is, are they going to build it themselves and then just like kind of uproot the players who are kind of playing in the permissionless space right now? And I think it's kind of like hard to say because at least from what we're seeing with Coinbase and Base, they're kind of experimenting on both sides, right? They're using Morpho for like Bitcoin lending, but that at the same time they're experimenting with Uniswap v4 hooks for like permissioned pools and trading. So it's hard to say. They're using some of that infrastructure like right now and like making use of Uni and Morphos and other teams' work. But I don't know that the direction is clear, at least from like both a permissionless versus permissioned, as well as like are we actually going to use DeFi versus like, fork and co-opt it for ourselves. Maybe Coinbase will, reuse, make use of Uni's infra and Morpho's infra and others, and maybe Robinhood will come in and just like build their own stuff, fork it all, and throw KYC up behind all of it. Hard to say at this juncture, but we'll see. We're kind of slowly seeing some of these pieces at least kind of trickle into place, which is prompting the questions.
Yeah,
Go ahead,
and
Mark.
just to add, sorry, Mark, you probably have something more important to say, but I'm going to cut you off. Something to think about here is that like sexes move very, very slowly, and regulation moves even more slowly. So there's probably some time for. I know that all of it has been already happening, but there's no need to panic. Not everything's going to be forked overnight.
Yeah, I agree. I think, like you said, the regulatory aspect is going to be the slowing factor versus the actual technology. But on that front, I was going to say something with the blending of like the converging of blockchains and the TradFi world. Something I learned this week is that in the US there's these HELOC loans, like home equity lines of credit, and last year 20% of all of those loans were done on the blockchain, well, specifically Provenance, and then that's through figure markets, but they have like a white label product, so there's many like different like distributors, let's call them that. So like but these borrowers, they don't know that they're using a blockchain in the back end. Not necessarily, it's all abstracted away from them, right? So like this is kind of an example. I mean, this has been years in the making, and because again, the regulatory approvals take some time, and you have to get these things done right. But this is a good example of how this technology can make accessing these kind of loans cheaper without anybody delving into any of the complexities, but still having some form of like centralized legal like entity who's facilitating it.
Yeah, I think that's a good point. And then maybe to hammer home the regulatory front, like we've seen as well with Robinhood and their attempts at rolling out the event trading platform. They got shot down initially by the CFTC, I want to say, when they tried to do trading on Super Bowl outcomes. But now more recently, at least within the past month or two, they've been able to do a broader rollout of that platform. So at the very least, we're starting to slowly see on some of these things. In this case, it's just prediction markets specifically. The regulatory gears are turning a little bit. Paying attention to what's happening, it's like it's laying out the threads for the future. We can kind of see some of these things start to form. Maybe in a slightly different gear, I want to talk about. I think this is kind of a hot topic right now. Like Solana's sort of institutional mindshare is becoming a bit of a topic or a thing that's happening. There's conversations and at least around potential ETFs coming to the US. It sounds like there may be some products in Canada and some other places already that are live. And the other sort of shock that we've seen in traditional markets is Janover is taking basically the MicroStrategy approach, right? They raised some money and then they bought some Solana. They've bought more since this announcement of 4.6 million. I think they've maybe doubled or tripled their buys, but I think they essentially raised something like 40 or 50 million with plans to invest a lot of it in this whole ecosystem and run a validator, things along those lines. And so we're kind of maybe seeing like a sailor strategy, but with Sol sort of approach, if that's the right way of thinking about it. I guess I'm curious you guys' thoughts. There's a lot of talk. It's funny. There's a lot of talk actually about ETH and Ethereum's like institutional mindshare. All the institutions are going to come in and buy ETH because ETH is the best place to do things on chain. But I find more and more that there's actually maybe a lot of interest on the institutional side for Solana, or at least some of the conversations are popping up and seeming that way. What are your thoughts there?
I mean, people want the coin that goes up. Like even institutions, that's really it. No, nobody wants to buy. I remember actually one of the things that people kept pushing back in the day when ETH hadn't underperformed for this long was, oh, institutions are going to look at ETH and say, wow, this has a lot of catching up to do. Don't think that's been the case, as you can tell by like ETH ETF flows. And yeah, I mean, these guys, like, I think we often, obviously, institutions have different forms of approaching investments, but at the end of the day, they also have the same monkey brain that we have, and they see a chart that's going up or a price that's going up, and they're interested more in that asset. And when you're interested in an asset, I think we also realize this, and I think a lot of people who are listening will also realize this is if a coin is going up and you become interested in it, then you read into it. You want to learn why it's the case. And I think that's why also, like, as Ethereum underperformed, everyone started talking about why it was underperforming. And then at that point, it's almost like, yes, price is affected by causes, but also like the causes are constantly being repeated because of the price. And then that becomes kind of a flywheel. So I think like institutions also hear about that and they see it. Like, yes, Larry Fink is going on television and saying Ethereum is where everything's going to be tokenized, but if he can earn the fees off of Solana, not stable coins, if he can earn the fees off of Solana, a Solana ETF, then like he'll change his tune immediately. Or if he can make money off it, because that's his job, is attracting capital into his products. And if Solana is going to attract more capital, then he'll go for that. So I don't think there's ever been, I don't think that narrative is going to hold for much. Like we should have done Ethereum. We've seen that it hasn't held up. And I think unless they make a lot of changes, including to the price, then it's probably not going to change. People want to make money. Simple as that, I think. Not a great take, but
No, I think I agree with Bach. I don't know why you would invest your treasury into Sol as a company. But yeah, I have no take on that. But I've seen institutional interest picked up in Solana over the past few months for sure. Last month, the CME debited Sol futures, and that's like a prerequisite for a potential ETF approval. We saw the same thing with BTC and ETH last year or 2 years ago. Um, there's also like indications of institutional interest on chain, like BlackRock launched its BIDL product on Solana. You've seen new stablecoin issuers on the network. You've seen First Digital, the US global network that's like a consortium with Paxos, Robinhood, and other players also launched on Solana, and they already have like $100 million of USDG on chain. So I think like you're seeing that institutional interest pick up, not just like in sold the asset, but actually institutional players launching their own products on the network, which is almost better than just being interested in like buying Sol as a speculator. Like actually building on the chain as an institution showcases that they have the same amount of confidence they have in Ethereum, where most of the tokenized products and institutions see today.
Yeah, 100%. I think the CME futures is a dead giveaway that ETFs are incoming. I think Polymarket has the odds at like 80, 85%. Not that they were necessary, but like with the current admin, we kind of know it. Um, I think I think institutions is a weird question. I don't think I think institutions are kind of using blockchains as pilots and as like distribution. For the most of it, they're very blockchain agnostic. I think Securitize is the one who actually goes through the legal process and the technical process of tokenizing these assets, and they're on like 12 chains. Like every chain has some real world assets on it. Even like ZK Sync, Polygon, Aptos, all of them. And it started off with Stellar, I think originally, and Ethereum, some of the older blockchains, and I guess from a sense of like security, Lindy, these have been around the longest. They were relatively safe to launch on. Maybe some years ago, Solana had outages problems, but I think as the tech has evolved and the understanding of these technologies has evolved with it, these institutions are feeling a lot more comfortable tokenizing on these chains. And all at the end of the day, these are off-chain liabilities. So if Solana goes down again, or if something else happens, like they still have a first ledger of records in some other digital ledger that's not a blockchain somewhere. So like those risks can also be mitigated to some extent. And plus, most of the buyers of like BlackRock's BUIDL fund, or I should say all, are institutions themselves, and they're KYC'd. So like these settlements can happen off chain as well. So not a huge risk there. I'm still looking for more when these assets are directly issued on the blockchain as the primary and only point of ledger. That's probably a bit more exciting. And when some of these other like smart contract risks and chain risks matter a bit more. But to go back on the Sol strategies and the Genova side of things, like Sol strategies was the first one I heard of doing it, and the name tells you they're trying to very well mimic MicroStrategies, which also changed their name, which I don't like, by the way. Strategies, I don't like it. MicroStrategies is a lot more powerful brand wise, I think. But anyway, I digress. I think what's neat about these companies too, because I was like reading some of their filings, and they are also going to be validators in the space. Whereas with MicroStrategy, they just buy Bitcoin and hold it. Whereas Genova and Sol strategies, they can actually stake their Sol, and if they buy a lot, they can be it's stake weighted QoS, so they can potentially be a meaningful validator in the ecosystem, or not insignificant at least, and through that they can earn income, earn a yield from that. So that's like a proper business line. And then who knows, maybe we see them expanding into like client development, or like investing in like applications on the chain, things to help build it out. Even Michael Saylor has said that they're starting to look at Bitcoin infrastructure plays to help support like payment rails of Bitcoin, or whatever it may be, lending, whatever. I'm not really I'm not privy, I'm not in those rooms, but like we're seeing it being more than just a treasury asset.
Yeah, I think that's a great takeaway, Mark. It would be interesting to see, and it makes sense, right? It would be in your interests, especially if you're Michael Saylor, for example. You own, or Strategy owns, a massive portion. It's like 2.5% of Bitcoin supply now, I want to say, some massive amount. So yeah, I mean, at some point you then want to further invest to ensure that this this asset or this network that you're so heavily tied to has some lifeblood running through it in the future. So yeah, just makes sense. They're aligning themselves in every way possible. So yeah, it would be expected if we see some of that from some of these Sol strategy based teams as well. Something to look out for though, if they raise a ton of money and then use that to invest in particular apps or parts of the ecosystem, that might be something to keep our eyes on. Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduce the world's first secure touchscreens, making it easier and safer to manage your transactions and assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional passwords and enhancing your digital security. Follow the link into today's show notes to get started with Ledger today. Jumping to maybe a totally separate topic, maybe one that warmed some people's hearts if they received the Yapdrop. Wayfinder prompt token launched. This is, I want to say, more of a discussion about Kaito and their sort of product at this point. But Wayfinder did, I'll call it a Yap drop, but basically allocated some portion of the supply to emerging yappers on the platform. And I think the only stipulation was that you just had to log into the Wayfinder application and connect with your Twitter account or your wallet that is connected to your like Kaido Yap account. And if you were on that list of yappers, you got some portion of this. I think the bigger question that this prompts for me is like, the commentary that I see around Kaito right now is, people just sort of making fun of the idea of like, yeah, like let's just give all the slop printers and like Twitter farmers like more free money. I don't know that it's like necessarily more free money, and maybe that's the question that it boils down to. Previously I think a lot of these like threadors and people writing about certain things, like maybe they're being paid under the table and you don't really know that, and you just kind of scroll the timeline and you see what's being talked about and you just kind of have to guess, like, is this guy a paid shill or did he like think of this himself? You don't really know that. I guess at the very least with Kaido, they're drawing some definitive link there where you sign up with your Twitter account, tie your wallet to it, and you can see who's getting paid for the type of content that they're putting out. I'm curious what your guys' thoughts are. They dropped an announcement the other day with a ton more details. Let me pull this up. What do we feel about the Kaito model? Like, what are your guys' thoughts? Big thoughts, small thoughts? I just want to know what we think about it.
I got both of the airdrops. So I got both the Kaido Yaps airdrop as well as the Wayfinder airdrop. I think I overall staked Prime for probably a total of 90 days, or maybe a little bit longer, but in different. So you could max lock it. I didn't max lock it. I thought that was stupid. I just locked it in like 30-day increments or like a little bit higher, so I got a better multiple based on there was a spreadsheet going around. I just used whatever the shortest thing on that made money was. And I did not make money. Not only did Prime go down higher than when I bought it, just FYI, but still lost money on it overall. And the airdrop that I got was 25 times less than what I got for my Kaido airdrop. And I think I've tweeted about Wayfind. I tweeted about Prime twice, definitely, maybe 3 or 4 times actually. But I think that speaks to a different thing, which is the entire point of an airdrop is to incentivize certain behaviors. Like that's why we have a lot of these token emissions programs, as well as like these airdrop programs. Is like liquidity mining is clearly to incentivize liquidity. Airdrops are to incentivize people to use your chain or your product before. Like you're making them lab rats to potentially get hacked, to deposit some form of money for something. I don't know what they use it for, but anyway, there is something that you expect from the users to do to get money. And that's historically been like the social contract between the user and the developer. And if the developer fucks around, the user gets really angry. Um, Kaito kind of changes this because you don't really have to do anything. You just need to tweet, and you need to have enough followers when you tweet. That's the only thing. And you need to sign up for the platform. I don't know how beneficial this is for projects, and I think this is something that is different. And like in crypto, there's this very clear different type of team. And in that team, there are marketing and BD people and growth people. And I think those people generally approach crypto in a different way than you and I approach it, in which they very much want to boost up, like it's their job. They want to get as much eyes on the project as possible. And typically this means like random partnerships, um, Kaito leaderboards, etc., etc. And it's not exactly, I think, what you want to incentivize, first of all. And like you have to think how much of that is useful. Like, are you going to reward the people who tweet, or are you going? I'm very happy because they rewarded me. I got free money. I'm, fantastic. But like, do you want to reward those people just because that's like the marketing mindset of saying we need to get as many eyes on our protocol as possible, and to do that, we need to give a percent of our token to Kaito so that we can be on their leaderboard? Or um is it to, I don't know, do something else? Like there's a million ways to airdrop. On top of that, you can also do coin sales, token sales. That's something that we're doing, Echo, Legion, etc. um so that's like my big takeaway is there's a clear like shift in how things are done, and I'm not sure if it's the best way to do it, because the token is technically the best tool that you have as a project to incentivize certain usage. Like it's our form of what um, traditional apps got with like gamification. We have it with the token, and the token is 100x more powerful because it's direct financial alignment. So I wonder if they're kind of wasting their juice on some like social media engagement that some marketing person came up with and said we should give this out, versus like if there's actually better ways to use it. That's my personal opinion. I'm kind of upset, clearly, because I didn't get the airdrop that I wanted from the tokens locked. I honestly, 25x less is ridiculous for staking money and then not receiving it.
I don't know. This sort of reminds me to the NFT airdrop meta, where projects used to reward certain NFT communities with airdrops without really doing anything for the project. I know Athena, for instance, airdropped Milady. I remember Mad Lads got a lot of allocations from Soul projects. I remember Bad Kids also got allocations from random projects. And at the end of the day, I don't know how beneficial it is as a project to just airdrop to these random communities. Um, like Box said, it's like a marketing play. You see on Twitter people tweeting about the project, thanking them for the airdrop. But I think most of these people will just end up dumping those tokens just because they have no financial incentive or skin in the game, and they aren't real users of like the project. So even though you might get a little bit of attention, like in the short term, long term, I think it's not beneficial for the project just to give away your tokens to randos just for a few like yaps online.
Yeah, and just to add to that, like people who farm airdrops or people who get airdrops do sell it as well, obviously. So it's not just like a yap
Yeah.
swing. But the social contract is that if you're a project and you can boast metrics based on user activity, you can raise on it, and then like you have a responsibility. I mean, we've decided that you have a responsibility. We can get more into the should people be giving out equity this easily, like tokens this easily or not. That's a whole different discussion. But in the current way that things stand, when somebody uses your chain, you airdrop to them. You're going against that, which isn't fantastic. Is even though they might dump, they have the right to dump. They let you raise more money. You need to let them dump it.
Yeah, I think those are fair points. I'll say Ian from Kairos, he kind of gave a similar opinion, at least in the short term, that you would just expect a ton of, cheap talk, people just, scheming the system of, I just need to mention, positive words in relation to this project on Twitter, and then I'll get paid for it. I guess the question is like, if they can really align the activity and like via AI understand if that engagement is real or not. I think that's kind of an open question. Maybe you could, maybe you couldn't. I don't know that it would be possible to figure out if someone's words are genuine or not. I think it's pretty easy to just be like fakely shilling something that you don't actually care about. Um, Maybe the bigger thing is like, you know, some of the pieces of this like change to their system that they announce are having assigned yaps from from a yapper leaderboard, but then also assigned staked Kaido, which rewards you with some token reward sharing in relation to like a specific project, and then Kaido Genesis NFTs that add multiplier effects. So, you know, maybe there's a leg to stand on here in terms of like, if you get the people who are staking their Kaido engaging with this thing, like, I don't know, I guess you would assume it's to some level of genuineness if they didn't just like dump all their Kaido at launch and, you know, they continue to interact with these things. But at the end of the day, it feels like it's, you know, not too much different than just just giving away funds to people who mention your thing in a tweet, which is free to do. You know, any one of us could spit out 10 tweets right now about 10 different projects, and if that gets us an airdrop in the future, you know, we didn't really do anything or bring anything to that project in exchange for that. So
Yeah.
I think realistically they'll definitely have to work harder to, like, you know, add caveats to this and like really build out a system to make sure that it's not just like this free gimme for anybody who tweets about anything.
I guess we can talk about like we can talk about what productive user activity is, and like staking tokens versus tweeting about it. There's two different takes there. Like, is staking tokens in a contract just to earn some yield, not being used, by the way. This isn't like provided as liquidity. This is just staked. That's not more useful technically than like sending up tweets. You are locking up capital, but you're not actually, like, it's inactive, useless capital. There's nothing being, unless the team is using that to buy something to, I guess, earn yield on it. Like the way that who the blasted it that way. I mean they captured yield, I assume, a little bit. Like that was different versus what Prime Prompt Wayfinder did. So maybe tweets are worth more there. It's like it makes more sense to reward people who are getting you in front of the timeline. I mean they're both useless. Like you said, people are just gonna game it. It's just 10 tweets. It's nothing, but we'll see. It can't be fixed. This is like, just needs to die out the way that the NFT thing died out, like Carlos mentioned.
Yeah, like what Bok was saying, like what is more beneficial, like staking or tweeting about the project. I don't know. I'm not gonna like opine on that right now, but I think that was kind of the biggest thing. I wasn't involved in this, but this is kind of the biggest thing I saw on my timeline for a lot of the hate. Like people who bought the token, staked it, locked it up for X amount of time, ended up getting less rewards than somebody who was just tweeting about it. And I think it's hard, managing expectations in crypto when you're doing a TG is one of the toughest things to do, especially in a bear market. But I think like the disdain comes from like that comparison and not really understanding the value accrue, like that comparison of rewards that you got versus somebody else got, and while thinking that you deserve it more.
Yeah, I think that's fair. The comps that I had in my mind is like maybe Kaido just replaces all of these like generic questing platforms like your Galks, where it's like, hey, follow our account, retweet our tweet, you know, share it with 5 friends. Like it's essentially the same thing if they can just like go and scroll like your activity, you know, get numbers about your users activity on Twitter, and how much they're like talking about a certain thing. It feels largely similar to that. Now I know there's usually like there's sometimes an on-chain component to some of that Galk stuff, but I'm sure Kaido, you know, they can loop that in as well, right? If they've got people's wallet addresses, maybe there's more to come, right? Like maybe an on-chain component gets baked into that with like test nets and mainnets, and that's something they can play with. The other one, like maybe interesting comp or like sort of different approach, is this like Ethos network that is doing like this reputation and credibility for what I think right now is like just generally Twitter accounts. So like people rating like good or bad, like this guy has good rep or bad rep. on their posts, or like acts in good faith or not in good faith type of thing. It's a little bit different than Kaido, where they're just like, using AI to like do sentiment analysis and see like, okay, this thing is getting talked about or like is interesting right now, versus, oh, people think that, this person or this community or this thing is good or bad, whatever that means. Maybe that's another angle that they can play with as well. I'm not really sure.
Yeah, I think the simplest way to fix all of this is to, like, Wayfinder is AI agent framework thing. So why not make people pay fees for that and then airdrop it? Like, that's what all of it should be. If you want to do productive or like for it to be useful, it should always be based on fees. And this is like going against what I would want, because ideally, like, I was very happy when they were doing the NFT airdrops because I had the NFTs that got airdropped. And same with the Kaido yaps. I'm very happy that I got the airdrop because I yapped. But like, realistically, if you're a team, you want to pay. You want to pay for PMF, like that's the whole goal, or you want to pay to raise. And both of those lead to one thing, which is you need to reward volume. No, not volume. You need to reward fees, sometimes volume, stuff like that, or like just people taking risks to make your product better, either by using it or by like making it more liquid. I don't think it makes any sense to, like, the Galaxy stuff always drove me crazy because it just doesn't make any sense. I'll give like 3% for like Discord joining, dude. Why?
Yeah, I think that's a fair point. It reminds me, there have been in the past like absurd giveaways basically for just having been in a Discord when a snapshot was taken. It's like,
Yeah.
why are you giving someone $10,000 just because they were in a Discord, which is free to join, and didn't do anything or post anything? Like, you're just giving away capital for no reason. But yeah, I don't know. We've seen the game continue to evolve like over time. I'm sure it will. We're going to go through more cycles of this for sure.
If anyone wants some Bach lore, I complain about this a lot, like all of this thing, but the Aptos airdrop, I don't know if anybody remembers that. You just needed to set up some emails, mint the NFT, and got like airdropped. That's probably like a great moment for me overall. So, my lord, I lost. Like, that
He
was
was going
like
to fig
start
talk, and then he thought
2022.
better of doing the fig talk on it.
Yeah, I'm not doing TikTok. But that was like 2022, early 2022. No, late 2022. It was FTX hadn't collapsed yet. It was before FTX collapsed. Um, it was like post 2021 bear market. I'm gonna kill myself, and then the Aptos airdrop. So there is good in all of that as well. Like, sometimes it saves somebody's life. In this case, mine.
Nice. I remember.
Aptos kept
Yeah,
Bach alive.
yeah. I remember something similar with the wormhole airdrop, where they airdrop to a bunch of NFT communities, but you had to like link to their Discord, and a bunch of people didn't like link their account, like their NFTs to the Discord, and that caused a huge amount of controversy. But at the end of the day, like, people don't like, people forget it's just free money. Like, they're giving you free money. I don't understand why people complain so much at the end of the day. If they didn't have any financial incentives in the project and then they just didn't get any money, it's obvious. Like, I don't understand why they would complain otherwise.
To be fair, I always complain because if you
Yeah.
complain, they'll have to try and make it better, and I might get free money. So maybe I'm the problem.
Yeah. Yeah. Good points on all sides. I mean, I think it's tough with all the arbitrary criteria, right? And you don't know beforehand. And so it's then easy for people to run down the conspiracy rabbit hole of like, oh, well, all the insiders knew, they all linked their accounts, they all bought this thing beforehand, and they dumped right before the snapshot or whatever. It's like, what are you going to do? The days move on.
I will say one thing: the insider conspiracy is less of a conspiracy and more of a fact, I think, because sure, like, it's not coincidental that they sell exactly at 12:01 after their like snapshots at 12. So
yeah,
so
I mean, definitely when you see charts move like that on assets that are directly related to like snapshots, then somebody knows something. It's just like it isn't you.
Mhm.
All right, cool. I think that was good chat. Last topic I want to jump into, and we've got Bach here. He wrote about Bera a couple months back. We had to bring him back on. The timeline's asking what's going on with Bera. I want to pull up our dashboard. We do have some decent data here. I think the big question mark, we can ignore price, but the other big question mark is like, we've got this chart of stablecoin supply on Bera, for example, and over the past few weeks, we've gone from a pretty strong high of 800 million plus down to 378 million. So like a net loss of like 500 million or so of stablecoin supply on the chain. There's a couple of other metrics that stand out, but I think maybe the one thing that's worth pointing out is that this week here, like March 24th, does coincide with when proof of liquidity went live and they announced a bunch of new reward vaults. And there was also a spike in BGT redemptions that day or that week around that time frame. The other thing that's lingering, and I want you to talk about, Bach, is like, does this also line up with like Boyko Vault unlocks? I know that was like a 90-day or so thing from when the capital was committed there. I wonder if this is just like a big storm that's kind of all combining and hitting Bera all at the same time of, changing up which vaults are being incentivized, and also like a bunch of people in Boyko got their money unlocked. What are you thinking?
I mean, it's exactly what you said. A bunch of people got their money unlocked. The market's down. People want to get out. I need to preface this, and I already told you, Danny, I have to preface this, is because like the market has gone down, and in general, we see that people don't have the same risk appetite that they used to have. So you can't blame all of this on. I don't think you can blame a lot on the Berachain team. But in my like report, I did highlight that I thought it was a bit silly that they locked away a lot of interested Berachain capital in Boyko, and it wasn't moved until later. And that was, I can't remember how much it was, but it was billions of dollars from 30 to 90 days locked away. Now that's, I think, the second tranche of that hasn't unlocked yet, so that's something to keep an eye out on. The second thing is, like I said, that's unproductive capital. Can you pull up the RAV or the fees? Not RAV. I'm gonna get yelled at. First of all, you can see where the first one was unlocked. And second of all, or actually that might not be. Anyway, you can see that like that money just hasn't gone in. It doesn't make a lot of sense for a chain like Bear to not have. If you're a DeFi chain, you want activity. All chains want activity, but I mean, Bear just doesn't have it. And that's because I think they locked away way too much capital into these vaults. And additionally, I mentioned this in my report as well. I don't think that they are playing the right game for the stage that crypto is in right now. Like, we want fast trading focused chains. Solana, Hyperliquid, coming up is Fogo, et cetera, et cetera. Like, we want Speed Monad, Mega Eve. Like, these are fast chains built to generate either like a lot of volume and fees based on that volume, or like people are able to transact in real time. That's what you want, and that's not something that Berachain has offered. So I think those two, combined with the fact that, like I said, there's a market downturn, has led to a lot of outflow from Berachain. Also, it was inevitably going to be a very PvP environment. Like, nobody, I don't think anybody expected to go into Berachain and say, "Oh, this is going to be a fun time." It's just, there's too much capital in it already from raises. There's too much expectation, and like all the yields are diluted, and they rely a lot on liquidity mining and these like vault based tokenomics, which people are just too smart for now. I think like even the average retail participant is like, I probably shouldn't put money into this 400% LP pool because my money is going to half, and those that do put in get out as soon as they can. I think overall it just doesn't work that very well. But like I said, I think it's also a very reflexive chain. Clearly, like, it relies on the market to go up for the incentives to be used. But that also goes to the downside. When the incentives aren't great, then people don't really want to take the risk of holding something that potentially isn't as great as the rest of the market. Like, I think everyone here probably has in their mind like bear market L1s and L2s, or I guess all market L1s and L2s, and like bull market L1s and L2s. Sonic bull market L1 or L2. Berachain bull market. So I think you probably have that in your mind as well, and that's how you approach these L1s. I think it'll be fine for them. Probably a good idea to keep a track of it and keep track of the yield, the activity. I assume they'll have big incentive programs going forward just to get more and more attention on the chain.
You think they can turn this, like, so let's say it stays the same, because the throughput of the chain is kind of vanilla, right? Vanilla EVM, like 15 TPS on an EVM ish chain. So unless they've got more throughput than that, because it's a little bit unique in their specific architecture, but
it's like you're going against the grain, I think, a little bit. Like I mentioned, I think people want something different now. We've gone away from no matter what your like morality or ethos is, we've gone away from maximum decentralized. We want like just things to go through and World War III resistant. Like we can handle it being a little bit slow towards more so. You know what? We can make some trade-offs in decentralization as long as it's fast. You can even hear this in the institutional narratives. Like we've clearly gone towards like we need settlement. Like the whole thing is that we need quicker settlement for them. So the market has changed. The L1 that people desire has changed. You're kind of going against the grain by having a 15 TPS chain, like you said. So you need to offer something vastly different. Like you need to offer something that people want to have. So abstract is, I'm not like saying I'm bullish abstract, but I'm saying they're clearly trying to carve out their own niche, which is we want like user focus. We want to make it as friendly as possible. Has it worked out for them? Not really, but like if you're going to be a vanilla L2 or L1, that's the angle that you have to take. You have to have a differentiator, but you can't both be like a slower chain. In my opinion, you can't both be a slower chain as well as like your main offering is, oh, we're going to bring like 2021 DeFi back. Like it, and this is also my scenario for a bunch of other things. Like I don't think the past can always come back because it relied on a completely different set of circumstances. In that case, like ZERP, as well as like people didn't really understand how anything works, so they just fucked around a lot on chain and they mined liquidity and life was good. It's not the same. We were not in the same environment. I think people want different things. That's my macro take as well. It's not ZERP anymore, so that's it. Any other questions? I'm happy to field them.
no, I think that was good. You definitely can't pretend like we're in ZERP.
No, you can't. We're not. That's my macro take. We're not in ZERP.
I like that you mentioned Sonic, because I think it's interesting that like clearly they realize that you can't just like spit the exact same thing out, like, and they kind of did spit the exact same thing out, but the way that they're marketing it is like, oh, this is like a, super fast 10k TPS EVM parallelized chain, what have you, but playing into that narrative of like we're going to spit out like a fast and cheap chain, which Phantom technically already was. But running it back and then also running the incentives and doing the points program all at the same time, it does make you wonder, like, if Bera had gone the same way, kept the whole reward mechanism, proof of liquidity, all this stuff, but then also leaned into the kind of new age, hey, we're going to do less validators, we're going to do what we need to do to like get this thing to crank, and it's going to be like a fast trading focused chain, but we also have this like crazy reward scheme under the hood.
Yeah.
Like, I don't know, maybe things turn out differently, but maybe not. I mean, it's a down market, like you're saying. Lots of things are getting spit on. It's hard to say.
That's key there. It is a down market, and Barrett's very clearly a bull market thing. So that's key. And the second thing is, I'm sure somebody's going to yell at me about this because my like Berachain knowledge is old at this point. But from what I understand, their whole shtick was doing stuff with Cosmos, which you can't really make that fast very quickly. At least in a previous iteration, I don't know if it's still the case, but so it's not the same. Like they're not using. You see a lot of these new chains use like BFD consensus, and it's like purposefully built to be really really fast. Or in like Fogo's case, it's like Fire Dancer with 21 validators. So they're like purpose built for that, and like that's their like structurally. I just think there's an issue with Berachain. Like structurally, it's not built to be fast from the very get go, and it's not built to play this cycle's games from the get go. So it's gonna have problems. I think you can only have one, and then you can change the narrative around a bit. Unfortunate. I did like the marketing.
I wonder how much you guys think like timing plays a factor here. So like if I think about Bera and I think about like Eclipse, because we were talking about this one the other day, you know, these teams, they did ideation and like raise money years back. So
Yeah.
whatever like the popular hot thing was then, you know, farming all this stuff back then was like the thing in 2021, like DeFi summer type stuff. So it's not absurd that like Bera would raise on the idea of like making a chain on this. But when it takes you 3-4 years to actually launch the thing, it's like you maybe already missed the window of that narrative. I mean, I wonder how much that has an impact here, where if they had just dropped that thing right away, maybe it would have done well like during the summer of 2023 before everyone like fully got on board like this fast chain good Solana train.
Yeah. I mean, it's something that is very, very relevant. And like you said, Eclipse is another one. Think of all of the modularity ones as well. I know some of them didn't raise for it. They just popped up at the same time, or they shifted towards it. Didn't work out. Same with a lot of the eigenlayer related or restaking related ones. It's an inevitable risk though, and I think VCs and protocols both bear this risk a lot more than investors do, like liquid investors and retail do. If you are going to be at the forefront of frontier tech, I don't know if we can still call frontier tech after how many years, but you have to take like obviously risks on what to invest in. And they move really, really fast. Like we're going to look at some of the things that are raising in AI right now. And we already knew, and we're going to be like, why the fuck are you doing this? Like, this is irrelevant. It's going to be relevant in 2 years. And that's been the case. And I think you can probably look at some chains that you're seeing right now as well. Like one thing I've been thinking about is stablecoins. Stablecoins are massive. Okay. 6 stablecoin announcements in the past month or 2 months, like for new chains. Like, yes, of course, some of them will do well, and I'm sure stablecoins are large enough TAM to like feed everybody and their families and the VCs and all of us. But I mean, come on, like there's some that have distribution edge, Plasma, because of tether relationships. There's some that have existing DeFi integrations edge, Ifina. The rest, we'll see. I'm not trying to shit on any team, but like if you are on the liquid side, or if you're a retail investor, or if you're a VC, anybody, you should look at these and say, what's like in 2 years? I think most people already do this. Maybe I'm stupid for like explaining it, but in 2 years, 3 years, will this narrative actually last? Is it going to be relevant? People change. I'm not the same man I was 2 years ago. Think about that.
Yeah, I think that's a great point. I think that encapsulates exactly what happens with a lot of these projects, and especially when they just take way longer than expected to actually go to market. I think that's probably the bigger thing there is like if you come out with this idea and it takes you 4 years to actually bring it to the market, then like the market's already different. Like it's too late unless you got really lucky and you pinpointed the exact thing that the market was trending towards. I think there's only a few cases of that. I guess Monad is maybe still in the running because they latched on to fast chain good, alongside some of the others.
But also, I think Mona gets a lot of shit, especially because they raised a lot of money. Like they raised a lot of money, but what they're doing is, in my mind, a lot more different to what others are doing. So the EVM's main issue is that it's hard to scale cheaply without fucking people over, and to make it really, really fast. And that's like they're building it up from both the hardware side, like they're focusing on the hardware improvements. Obviously, they're not running it on Raspberry Pis, but they're also on the software side. Like they have a completely new consensus mechanism, Monad BFT, which I can't remember their lab side name, but they posted something on it. I'd recommend checking it out. It's very interesting. So I think they kind of saved grace a bit there because they have a very, very novel protocol. Now, should they have raised 20, 30 mil? That's not up to me. That's up to the VCs that invested in it. But I would say they're relatively safe from this until a new chain comes up and they are like, oh, we're actually doing this 20,000 TPS. Then we'll see. But for the time being, I think they're relevant.
And that's what we're seeing now, right, Carlos? Like all the SVMs and the other chains are, it's like, yep, we're going to do 1 million TPS. We're going to do 10 million TPS. That's kind of where we're at now.
Yeah, I mean, but again, I think I will reiterate your point on the time to market thing. Like Monad raised in January 2023, I think, and they still haven't launched mainnet. Like Eclipse launched again, like late 2020, raised late 2023, I think. And then they just recently like launched their mainnet. Like they raised like $65 million. I don't know why they need so much like money. Same with Berachain. They raised like more than $100 million. Like, what what did they do like with $100 million? Like these, like I just don't get it. And then yeah, I just think it's more like a BC issue as well of like being like blindly rewarded for just funding infrastructure and random L1 projects, and like it's just an incentives issue at the end of the day, I think.
Yeah. And another thing to add on to that, like you said, Carlos, it is like an incentives issue, and VCs have been rewarded with it for a very long time. But also, something we forget about is that before, and I might be completely wrong about this, and next cycle we might have something completely different. But before this cycle, it was very much like a up for grab. Whatever, like nobody knew what was going to win, what tech stack, what like if people wanted speed or if people wanted decentralization, we genuinely didn't know. And I would say we still don't really know exactly what we want. So VCs benefited off that, and like a lot of teams also benefited off that. Is and investors also, because you could make a lot of money longing Soluna FX. So like we had some form of there was a gap there. We didn't know. I think that's been filled semi, and we know that we want fast more, at least slightly more than other alternatives.
I think the big thing that people knew, everyone knew that we wanted better UX, and there was no agreement on how to get there. And that's how you end up with stuff like alt layer, but also just like Solana and Sui and Aptos, but also like a million L2s and like L2s that then have like a million L3s on top of them. Like there was no semblance of agreement on like what the right way to like solve because it's not like there's one UX issue. You can't just like be like, it's the one thing, but there's a lot of like various UX issues that I think the industry was going after. So, were you going to say one more thing? Otherwise, I have a question for the group before we close it.
What were you? Yeah, just ask the question.
Okay. So then, if we sit here today, what do you guys think? Like, you look out 2-3 years, what's like the thing that you think is going to be the same, or that
Bitcoin doesn't change, man. They can't take that.
Excluding Bitcoin, is it? Are we still going to be in Solana land, or is Hyperliquid usurped it, or is it something else? Is it Fogo?
I even think Bitcoin might have some L2s in 3 years. That might start to be getting some transaction fees. Carlos vehemently disagrees.
I don't know about Solana, to be honest with you. I like L1 landscape. I genuinely don't know. I think because we recently had DAS, recently as in like a month and a half ago, I'm still on that train of like, oh shit, like the big TradFi guys and the sectors are gonna eat our lunch in the L1 space. So like my base assumption is to say Robinhood is gonna buy like an entire dev team, build out their L1, and it's gonna cook. But that's probably just like I'm anchoring my thoughts to the last month, so that's probably not the best take. Probably a combination of, I think Solana probably stays. But we said that about Ethereum, and are you convinced that Ethereum will stay? I think it probably will, but I'm not convinced. So we'll see. Hyperliquid though, definitely Hyperliquid.
I do think these things can hunker along, even as shells of their former selves, for a long time. So I don't know that, like, I mean, you could have an argument about, like, I don't think ETH is gone away today. So I don't know that in 2 or 3 years, even if it continued on its current trend line, if it's really gone away. And if it turns around the ship, then obviously it's not gone away. You kind of took mine, but I was going to say that we would see another big fintech ecosystem rivaling Base. is my big thought. And that could be Robinhood, it could be somebody else, but they're, I think, obviously the contender in the lead right now for that one. Carlos, you said no Bitcoin L2s or L3s. Why not? And then we can close.
I don't know. I was just messing with Mark. I think I don't believe in Bitcoin L2s. I don't think it makes a lot of sense. I think Bitcoin's fine as it is.
Yeah, I agree with that. I think the whole purpose of Bitcoin is that it never changes. Like, that's the base assumption. Bitcoin never changes. It's always 21 mil. The chain just chugs along. I don't
No,
think
I agree with both of y'all. I don't think Bitcoin's going to change. I just think we're going to see L2s, whether you want them or not.
That's fair.
I think that's fair. I think we're always going to be we're going to be looking for more reasons to like maintain the strength and the legacy beyond like just asset go up. So I think it's natural. We'll keep seeing that over and over again. Awesome. I think this was a great app, guys. One last reminder for permissionless, grab your tickets, link in the description, 0x10, 10% off. Me and Bach will be there. I hope Mark and Carlos will be there. I don't know who's going to be there. Actually, it's not locked in at all.
Tickets, Mark and Carlos will be there. If you don't buy a ticket, Mark and Carlos will not be there. In fact, if we don't get any tickets, one of them will be sacrificed. So pick.
If you don't get any tickets, none of us will be there. And if you buy a lot of tickets, we'll all be there. So buy your tickets. We'll see you there in June. 0x10.
Wait 1 sec. Actually, let me do one thing. We are going to, if you are a 0x10 listener, we're going to be holding events for 0x10. So it'll actually be quite fun. You might make the money back on food and drinks. So that's always probably not if you're flying in, probably not the money, but the whole money. But if you're like in the tri-state area, I'll have to talk to the podcast team about this, but I think you can definitely make your money back, at least on the year.
I thought I was going to have to cut you off because you're going to say you're going to make your money back on the airdrop, but that's definitely not.
There's no
coming.
airdrop.
There's no airdrop, but there might be food and drinks and maybe some games or other things. We're figuring it out. All right. Great app, guys. Thanks for coming on today. Thanks to all the listeners out there. We will see you next time.